Well, Heidi, that budget over the weekend, some call it prudent, others say bold and even beautiful, providing the middle class tax relief amounting to about $12 billion, all in an effort to boost the economy, boost consumption. This is an economy that grew more than 8% at one time, now about 6%. It is risking derailing Modi's plan to have India a developed nation by 2047. Now, a lot is being said about how the economy needs a boost and that budget may just provide that. The question really is, how much of a boost will it provide? Well, let's get perspective, insights from Shweta Rajani, head of mutual funds at Anand Rathi Wealth. Shweta, good to have you with us. This is a brand new studio. We're really excited to have you here as our first guest. First off, though, this budget was released at a time of macro environment uncertainty, and we just heard from Trump himself imposing tariffs on the likes of Canada, China, as well as Mexico. How do you see that playing out for India?
Sure. Good morning and congratulations on the new studio. So yes, we did have the budget at a time when there is global uncertainty as well as, little struggles on the domestic front as well. But actually, if you see specifically on the tariffs, now what we are seeing is on a relative basis, India could actually be a beneficiary of it because there's huge tariffs coming in on China. India has an advantage, so we could get a lot of that trade shifted from China to India. On the other hand, if there are tariffs imposed on India, that's the other risk. You see that could India be the next one over there? So from that perspective, if we see in just terms of the goods that are exported to US, rough math basically says it's less than 2% of the GDP that could get impacted, and India has an advantage also that you're looking at boosting in domestic consumption. So if I have to weigh what could be the negatives of a tariff coming in and the increase in exports because China trade moving to India partially, as well as the domestic consumption giving a boost, I don't see so much of a downside risk to the Indian GDP from a tariff coming in. Of course, could there be an interim volatility? Yes, that we have to brace for.
Volatility will always be there. 2025 is going to be a year of vol. It is interesting when you take a look at how the U.S. is imposing tariffs. India, on the other hand, has been cutting tariffs, everything from autos to textiles. How do you see this playing out? I mean, on balance, how does it look for India? How does it then, how does it affect its competitiveness?
Absolutely. So, clearly there is this drive of Make in India, and which is where they've been boosting a lot of the manufacturing, bringing in a PLI schemes, reducing the tariffs here. So there would be an impact on the balance of payment because the trade deficit would widen a little. But today, over the last few years, we've got very comfortable with our trade deficits as well. There's, forex reserves, which is there. RBI has been very active in terms of ensuring that the rupee doesn't depreciate too much. So even, after where we are seeing the rupee being, it's still on a relative basis is well positioned compared to the other countries.
Let's talk about the rupee, though. It is hovering at record lows. We've seen the dollar rising for 6 days in a row. And with the tariffs, chances are the dollar will rise again. Where does that leave the rupee?
Yes. So over a longer time period, so if I exclude this few months, which could mean that, we see far more depreciation in the rupee as compared to the long-term averages, it should hover around 2.5–3% of depreciation over the next 1.5 years. That's the projection. And yes, there have been pockets even in past where you could have seen the rupee depreciating by around 5.5–6%. But then, we also have good amount of forex reserves. RBI has been intervening, and with all those steps being taken by the government, by RBI, and where we are seeing the India positioned itself to be a stronger economy, it should get back to an average 3% of depreciation against the dollar.
So where do you see the rupee trading in 2025?
I would not be surprised if I see a 87, 88 level in the interim, and then it going back to that trajectory of a 2.5–3% depreciation.
Okay, let's talk about the budget now. We're talking about how, it's providing relief for the middle class, $12 billion worth. Yes. Yet, at the same time, we're looking at the government putting its deficit at 4.4%, hardly moving it. I mean, how do you square that?
So actually, I'll say the budget was very, very balanced in that way. There were no big bang measures announced, but very smartly, the government is also trying to revitalize the private sector. So, whatever it has to do, you see the capex targets just gone up by around 10%, but they're boosting a lot of PPP module. Consumption, on the other hand, is also likely to go up. Like you said, just to give you some numbers, 25% of the salaried individuals fall in that bracket of less than 24 lakhs, where they could get a huge tax advantage because of the rebate. So that would boost the disposable income, which means consumption going up, as well as it would have a benefit on a lot of the, therefore, sectors over here without compromising on too much of the infra play. Infrastructure, over the last few years, if you see, there's been a moderate 8 to 10% increase across how the infra is being played. So they're not missing out on infra, while it may look like there's not much increase in the capex. It's just more structural in terms of saying private, you have to now start kicking in.
Okay, so given that backdrop, how do you play? How does your portfolio, how should it look like?
Sure. In terms of sectoral allocation?
Yes, that's right.
Okay. Clearly, first is consumption. So, given the disposable income going up, a lot of policies announced in terms of footwear, toy, all those sectors, so consumption. Second, I would say auto. Auto again, because it will be a beneficiary of the disposable income going in. Plus, there were a lot of policies or custom duty cuts, exemptions announced for auto components, PLI schemes, so that's going to benefit that segment. Agri, there's a 17% increase in the budgetary allocation, and a lot of those schemes announced there, which could boost, your fertilizers, seed, all of those. Banking is not to be missed over here, because there's a lot announced for MSME and credit enhancement for the struggling housing sector, infra bonds. So there are a lot of those benefits. So I think if I have to just top 3-4 sectors that should be there in a portfolio, I would say this is how it should look.
Shweta, thank you so much for joining us this morning. Shweta Rajani, Head of Mutual Funds at Anand Rathi Wealth.